Your savings account is quietly being robbed. Not by a hacker, not by a scammer, by the US government, legally, and most people have absolutely no idea it is happening. The US owes $39 trillion, and they have a plan to erase it. The plan does not involve cutting your benefits or raising your taxes dramatically. It involves making the dollars in your pocket worth less every single year. Let me show you exactly how and what to do about it. The United States now owes close to $40 trillion. To give you a sense of scale, if you spent $1 million every single day, it would take you over 100,000 years to spend that amount. That is how big this number is. And it is growing fast. The government adds roughly $6 billion to that debt every single day. But the debt itself is not even the worst part. The worst part is the interest bill. When interest rates were near zero, borrowing was almost free. Now that rates are higher, interest costs have exploded. For the first time ever, the US spends more on interest payments than on the entire national defense budget. That money has to come from somewhere, and it comes from you through taxes and inflation. When a country has this much debt, there are only 3 realistic ways out. Think of it as 3 doors. Door 1, cut spending and raise taxes hard, slash Social Security, Medicare, and defense. This works on paper, but it is political suicide. No politician votes to cut your benefits and keeps their job. Door mostly closed. Door 2, default. Tell the world we owe you, but we are not paying. This would destroy the global financial system overnight, since US Treasury bonds are its foundation. Door permanently locked. Door 3, inflation. Let prices rise quietly. Keep interest rates lower than inflation. The debt stays the same number on paper, but its real value shrinks every year. Nobody votes on it. Nobody announces it. It just happens, slowly, invisibly, at your expense. Guess which door they always open? This is not a theory. America ran this exact playbook after World War II. Debt hit 106% of the entire economy, similar to where it is heading now. Instead of cutting spending responsibly, the government locked interest rates artificially low. Treasury bills were pegged near zero. Long-term bonds were capped at 2.5%. Meanwhile, inflation ran far higher, sometimes into double digits. What happened to savers and bondholders? They earned less than inflation every single year. Their money lost real value while the numbers on paper stayed the same. And over 30 years, the national debt quietly shrank from 106% of GDP down to manageable levels, not because of discipline, because of inflation. The same playbook is running again today. So what does all of this actually mean for a regular person trying to save money and build something? It means your savings account is losing. If it pays you 4%, but inflation is running at 5 or 6%, you are losing 1 to 2% of your real purchasing power every year. The number goes up. But what that number buys goes down faster. You are losing money while thinking you are saving it. It means your 3% raise this year was actually a pay cut if inflation ran higher than 3%. You worked harder, earned more on paper, and still fell behind. And here is the part nobody says out loud. The inflation number the government officially reports often feels lower than what you experience at the grocery store. That is because the formula uses substitution. If steak gets too expensive and people switch to chicken, the calculation shows a smaller price increase. The math is not fake, but it does not always match your real life. Okay, so what do you actually do? Here is the honest answer for someone who is not a millionaire investor. First, stop letting cash sit idle. Cash in a regular savings account is a guaranteed slow loss in an inflationary environment. At minimum, move it to a high-yield savings account paying 4% or more. Not perfect, but better than losing to inflation silently. Second, own assets, not just money. Inflation transfers wealth from people who hold dollars to people who hold things: stocks, real estate, commodities, gold. You do not need to be rich to start. An index fund on Fidelity or Vanguard lets you own a piece of hundreds of companies for as little as $1. Over time, it beats inflation far better than cash sitting in a bank. Third, build income that grows with inflation, as salary is fixed. A business or side income can raise its prices as everything else gets more expensive. The most powerful thing a regular person can do is build at least one income stream that is not capped by someone else's decision. The bottom line, inflation transfers wealth from savers to owners. Stop being purely a saver. Start becoming an owner, even if you start with just $50 a month. The government is not going to send you a letter saying your savings are being quietly erased. It is just going to happen. And most people will spend the next 20 years wondering why they worked hard, saved every month, and still feel behind. Now you know why, and you know what to do about it. If this made something click, hit the like button right now. It helps more people find this channel for free. And subscribe, because next week I am breaking down another topic that directly affects your money and your ability to build something real. See you then.